Hello, I'm Roger Peterson. Welcome to Market Call. Hap Sneddon is on the show. He is founder and chief portfolio manager at Castlemoore. We're taking your questions on technical analysis. And you can reach us at 1-855-326-6266. Also send us an email, marketcall@bnnbloomberg.ca. All right, Hap, we were expecting it would be a kind of quiet Friday going into the long weekend. Thanks for joining us today. It's not that quiet. There's lots going on, especially with comments made by the president south of the border, saying all things are off now with China with the tariffs, and the markets have reacted. And let's take a look at some of the numbers here and see what we're getting here. For the big one right now is the NASDAQ. If we can pull that one up and see where we're at with the NASDAQ and the TSX, everybody is down right now. The NASDAQ at one point was down about 2.5%. It's sort of bounced back. What do you, when you're looking at that, what are your thoughts on it?
Well, as a technician, we mix everything. We mix the fundamentals, the seasonal, the technicals. We expected this, but you never know what it, it was sort of preordained. You look at the setup. We've kind of run through August, September, where we're normally get volatility in a corrective phase. We get a low made in early October, then we get usually another low late October. But you never know what drives that, Roger. Like, what's the thing that sets that thing up? And so today we have an announcement from a politician. We're sort of sanguine about it because we don't, we always expect that it's something's going to trigger that technical setup. And so, as you already saw, and as we'll chat about, the correction we expected, we think will be well bid. So any kind of weakness here from whatever the source, politicians, a little bit of bad economic news, a geopolitical event, that investors are going to probably step back in and step back in despite whatever, Mr. Trump, it seems to be a bit of a wild card for the whole world. And so I think the markets, we saw that with the tariffs announced, and, we had made a big low and a rush off of April. And so I think the market will eventually sort of absorb this and move on, knowing that we're in a period where we expect some weakness anyways.
Is it just something we've become used to then? Is that what it is? Trump and then things like this, we know they're going to happen.
Yeah. And, well, the point I was trying to make is that you can go back as a technician, the setup is always there, but you don't know what the story is, because technicals are sort of, they're binary. They're very clinical. They're very, the setup was always like this. So you go back 10 years, what did some politician or somebody do then that sort of let the technicals sort of, happen that was set up. And so today it was Trump doing something, and, he's been a bit of a wild card, but as I say, the market, because of the underlying strength, we saw, I think we'll probably talk about the jobs number here and there, the market's ready to buy this on any kind of weakness. And so I think that it'll do that. We may be weak for a few more weeks, as we'll talk about a bit, but we'll probably go through this quickly.
Yeah, the unemployment rate, I think, caught a lot of people off guard a little bit. More number, 60,000, I believe, was how many jobs were created in Canada this year. Good sign, but it also plays with, we may not see a rate cut now because of that.
Yeah, we've seen this a lot more in the Fed. There's one of the governors spoke last night that were sort of between, they were sort of between a rock and a hard place in that, and the U.S. was the last central bank to kind of start to, okay, we'll do this. But the reason they dragged their feet, unlike Canada, which is one of the first in the G7 to start to lower rates, the U.S. central bankers were concerned that, we lower too much. There's this strength underneath that may come back to bite us. And so in Canada, we may be less apt to start to lower now if we see jobs do well. GDP pick back up in Canada. The U.S. GDP, which didn't fall like Canadian GDP, starts to have some upward momentum to it. Then that'll put both central bankers in a bit of a fix, and we won't get those lower rates.
Okay. All right. We are going to get to your calls coming up after the break. You can call us toll free. Hap will be answering your questions. 1-855-326-6266, the number to call. Send us an email to marketcall@bnnbloomberg.ca. And we are here with Hap Sneddon from Castlemoore to get your calls in, your emails as well. And that's where we're going to start, Hap, with Dana. And out of all the retail players, This is an email. Would Aritzia be a buy right now with the news we saw today?
Yeah, well, when you have a spike up like that after you kind of have this correct, and what's interesting is it sort of stopped right there at that trend, the whole market, and we'll probably see this in a lot of spots. We didn't get to one of the charts that the crack team did for me off the top, but we're going to see this in the S&P that that it was sort of that's a support level, so it fell right off there. I don't know what the actual news was today, but up 10% today is quite positive. Crossing above this level right there. That recent high there will be quite positive. So we'll see how it approaches that level, but we want to see it sort of break out. If it kind of has a difficulty kind of getting through that there, then we may see some of this paired off today. This gain that we saw.
The big thing was the revenue jump, 41%.
Fantastic.
Drove
good for them. In a sector that's really been a minefield a bit. Some doing really well, then the big guys, Nike, go down the list, are sort of struggling and putting guidance out down the road, and it'll get better, but it might take a couple of years. And then, of course, the tariffs are a big one for
big one. But yeah, Aritzia is talking about expanding in the U.S., so there's lots of excitement about going forward with them.
Very good.
Okay, let's move on and get to John from London. John.
Hello, Roger. Thanks, Hap. Hap, it's a bad day in the markets, but there's a couple of bright spots. You mentioned Aritzia. The other one is uranium recently, especially Cameco, and then Energy Fuels, EFR. Energy Fuels has uranium, and it has a few minerals, some of which have just been banned for export by China. Could you set up the chart for me? Let's look at resistance. Let's look at support, and just see what you think. I appreciate your opinion. Thank you.
Yeah, great. This sector has been sort of pretty hot. Lots of reasons besides the ones that John made, but it was also the notion that a lot of the AI centers are going to be driven by nuclear power, and so there's lots of reasons why. But what we can see right here is stock starts to go parabolic. Whenever it goes parabolic, I always do get a little concerned, where it starts to just streak right up. What you want to see is if this new level we're at here, sort of around $30, is a sort of a new level. Just because it goes parabolic, Roger, doesn't mean that it has to sort of come back down to that trend that I drew right there. But, so the next few days, how does it absorb this massive gain there? The specific news, does the market, like it? Is it buy the rumor, sell the news? Will it sell off more than it went up today in the next few days because we get larger market forces sort of pushing on everything, and then that individual story sort of gets tamped down a bit. If we do look a little bit longer, we'll be able to help John a bit more. If we have a 3-year look, we'll be able to help John to say, is this how sustainable is this move? There we go. Right. Yes, there we go. So we still see this big, massive breakout there from around the sort of $10 range. So what I would suggest is, if John holds this and you're up significantly, you can always look at money management techniques as a source of decision-making versus understanding the technicals, understanding the news. What does money management techniques mean? Well, the stock I'm up 100% on, my initial weighting in this was 2%, so now it's at 4%. Well, I'm just going to sell this down to 2.5%. And so in this case, what I would do is just employ some money management techniques. There's not a lot of technicals we can grab onto because it's gone parabolic. So clip it a little bit, and then you're left with a position that you're probably going to want to hold for a longer term.
Okay. Yeah, let's get on to our next caller. Paul from Orangeville, what's your question?
Yes, hey. Give me this analysis on it. Yesterday went down $1.50, and today seems to be at the same price. What does he think about it?
Well, being that it's in a sector that's done quite well, you can see that, the May low here. There was something that happened there. It looks like in late September there specific to the stock, but the whole sector has been quite good. Again, like I just mentioned with the last stock, if you're up significantly, we do enter some weakness, in gold after you've sort of had this massive run up. We're at 4,000. You always want to look at the producers, Roger, to sort of tell you where gold's going. You don't look at the commodity itself because the producers tend to know how to use that very commodity. They hedge, they do various things with it. And so they tend to be a good leading indicator of what's going to happen with gold. If I own this stock right now, I would, again, look at it. Has it grown massively? Did the caller pick this up at sort of $8? We've made, almost a double here since May. Does it make sense? And that's what we're doing right now in our gold stocks. We're kind of looking at it. Do we want to clip them a little bit? The play looks quite good longer term, but gold can be quite volatile, and you can have a 20, 30% move over a couple months quite easily. And so do you want to try to capture that and book that profit, or do you want to just not try to trade something because you've got a long-term theme that's running? And so all the golds, besides iron gold, you're going to see all of them with this sort of similar pattern that the last 2 days, we had a bit of a reversal day yesterday. So that's sort of that suggests further weakness will come because of that pattern yesterday, but it's not guaranteed. So is your position the right size for you? Do you want to clip it off a little bit because you're up so much? Those are the things you have to decide on yourself.
All right, let's get to one more call. We've got lots of calls coming in today. Nizar from Scarborough.
Oh, hi, Roger. Hi, Hap. May I have your thoughts on Air Canada, please? The stock has been range-bound between $18 and $19 for quite some time now. Thanks for taking my call.
Okay.
Yeah, we finally got rid of all of our Air Canada, not because we had some of these legacy positions. You have clients that sort of have this over the time, and it's not exactly what you want. So we unloaded it just because it was sort of a choppy chart. We saw this sort of spike up. I've got a little bias to airlines. I've been doing this 32 years, and there's a few areas I've got bias on because of you make some errors over time, and certain sectors like airlines where
you learn from them, right?
You learn from them, but then maybe you don't go back because you sort of say, okay, but that's not maybe the right thing to do. But airlines very labor intensive. They're subject to labor strife, fuel.
The economy,
recession. So they're very, automakers too have normally been kind of a weird business to be in. Tesla's kind of bucks the trend in some of the new EVs, but so Air Canada doesn't really have a lot to look at. I've got a screen I'm looking at. I bring my laptop in here so I can kind of tell some other things, and the best I can tell is everything's kind of in the middle. There's nothing. It's sort of neither here, neither there. Yeah. If you hung on to it, it pays a reasonable dividend, I believe. If it broke down below I've got a long-term trend line here that I drew many years ago. I drew this trend line 7 years ago. I didn't change it. Modern technology lets me keep that. And that's sort of right around just below where we're kind of at. It kind of goes there for a long time. This little dip here is sort of an anomaly because the trend line goes way out further either way. That to me would say if it gets below that, I'd probably think there's a better use of your capital. And hopefully that helps the caller there. So it's sort of in the mushy middle right now. You'd want to see it go higher for a conviction that it's moving higher. Yeah. But if it breaks below, we could probably easily see sort of the $10 range again.
Okay. All right. On that note, we'll be back with Hap Sneddon of Castlemoore taking your questions on technical analysis. All right, lots of calls and questions for Hap Sneddon from Castlemoore, so let's get right back to them. This one is an email from John, and the subject is, could today's guest comment on, Hap, that's you, comment on two renewable energy stocks, Brookfield Renewable Partners and Northland Power.
Yeah, so we're going to start with Brookfield here. The whole sector's been reasonably pretty decent. This one's got a nice little trend there. I would say if we look at longer term, we'll see that this is a one that's we've only had a 3.8% gain over the last year. There's some other ones that have been much better, but I think now is a time where we're going to look at the Northfield. We own a fair bit of Algonquin. The whole sector is looking quite interesting. I'm not sure if it's sort of telegraphing to us that maybe things are a bit slower because you're sort of going to these type of yield captures. Certainly, energy is topical. We talked about connection to AI and everything energy except for the oil and gas per se, or the oil, pure oils. So I would expect Brookfield here to look like a decent holding over the next year.
So just kind of a calm, and now it's building.
Yeah, exactly. It's it's not had that run up as strongly. I think as the other sectors, technology, but when you look at where it's sort of at right now, it's got more of a room to run from here that looks clear than other spaces.
Okay,
and we see that if we look at Northland, if we're going to get there.
Yeah, let's get to it.
Yeah, this one sort of will really sort of capture what we're talking about, especially if we look at a bit of a longer term look. Yeah, so this is sort of the breakout here. When we do look at the longer 3-year chart, we'll see that this action here is all pretty positive because it's sort of establishing off of a low, right? So just because a stock is low doesn't mean it's good to buy. You want to see it kind of bottom and then start to make an upward move and then sort of cross other hurdles that were gateways on the way down that sort of, So what we see here is this sort of action right there. This last little bit's quite positive. So we had this low and then we had another low, and then look at this last low is higher than this low. So that's constructive. It doesn't mean you get justice, but it sort of gives you a place, as I always say when I come on BNN, to hang your hat. Okay, if I buy the stock that's low, I don't want to be buying something that in 2 months is lower and lower. So I need something that shows me that sort of it's trying to work through a bottom, and that higher low is something that gives you confidence. And so this one here, if we didn't own Algonquin, it's kind of our niche in that space. This one looks quite good here. You can see this 3-year number here, Roger. That's sort of terrible, but there's a big bunch of upside here. And if we can kind of get above, and stay above that. So the risk to reward is really good to me.
Okay. Let's get back to our callers. And Colin from Sarnia, what's your question?
Yeah, thank you for taking my question, Roger. I love your media skill set. Very good.
Thank you.
As for Hap, I have a certain amount of Knight Therapeutics, not a lot. I'll probably die owning it in my RIF. But what do you see? Is it just can't break through any kind of level? I'm going to keep it anyway, but give me your opinion.
Yeah, sure. I know exactly what you're talking about. We had held Knight for many years, and it just sort of gave us fits and starts. It's sort of got some promise always. It's got good management, but it never quite kind of delivers. We've got this little action here. It's hard to see, but you can, there's a lot of chop there. So the market's trying to hold into that little band there we see. And it's short. It's sort of about a month. It's sort of between $6 and $5.75. So it's really trying to hold there. If it doesn't, we're probably going to see this thing sort of head back down to around $5.14. So I'm not sure if I'm going to help. I'm not sure if I'm going to help him with this being, would sound, not a bane of his existence, but something that sort of gives him fits and starts. And, we needed to see this trend sort of hold, right? And that's pretty obvious. This little break there, investors became impatient, probably like him, right? And so now, on a positive, some of the things you can't see, some of the indicators, and all the callers will know indicators are sort of like a sine wave, right? They just keep repeating like that. And so if it's up here, the stock is considered overbought. And if it's down here, it's oversold. So a lot of these indicator, Rogers, are sort of oversold. But as I say, you don't get justice. Just because it's oversold doesn't mean you're going to turn back up. And so that's the one positive thing. If we sort of sit around here at 575-ish, and get more people sort of frustrated that they're down a fair bit in the last month and a half, you may wash out those weaker hands.
Yeah.
There is a contingent, including institutional, they're committed to Knight over the long term. But because they're a really development story, it can just drive you nuts. It's not a sort of a regular operating business.
And so you just got to hold on and kind of ride it out.
You got to ride it out or decide you want to go somewhere else in healthcare. Healthcare is getting interesting. One of the picks I make today is in healthcare. So this area's been sort of beat up. So it's a good place to be. Maybe this is one that if it holds there, it's going to flush out more of those weekends. We're seeing some bigger names start to operate, start to behave a little bit better. It's smaller ones like a Knight that's going to sort of keep the weak hands a little upset with it. And so, you'll see this in the biggest names. They're starting to act already. This one may do it in a while, but it may go down to sort of that $5 level before it gets there. So 575 is critical to hold.
All right. We've got lots of callers here. Sean from Pickering, we're staying with healthcare. Sean.
Yeah, just on that theme, your thoughts and technical analysis on UnitedHealth. Thanks.
Yeah. So what we see right here is what we sort of saw, what we saw with the Northland Power and one of my top picks we'll show later is that sort of bottoming phase. Like you sit there and oh my gosh, it's going lower. Here we go lower, and then that next low would sort of be this little band there. Hey, maybe the worst is over. United Healthcare is a big contingent on the Dow. I believe it's in the Dow. I know it's in the S&P. I'm pretty sure it's in the Dow. You can see they're down 40%. So. Is this a good time to kind of go pick off and take a look at healthcare? I believe so. Does it mean in 6 months you're going to be, necessarily in profit situation? No, it doesn't. I mean, there's going to be a lot of chop in this area here. So sort of, let's call it 450 up to 600, where you've got all these investors that bought in this area that may say, okay, once I get back there, then I'm going to sell it. So right now, United Healthcare, a good risk, good place to hang your hat on those lows.
Okay. We're going to leave it on that note there. We'll take a quick break. When we return, we'll take a look at Hap's past picks. That's next. Thanks for joining us on Market Call. Time now for Hap's past picks, and they are from almost a year ago to the day, October 9th, to be exact, 2024. Let's bring up the first one. And Walmart, not bad, 28% return, total return 29%. How'd you do? What do you think?
Well, we still like it. I think we chatted about this one last time I was on because it's still a holding of ours. It kind of this a little bit there. It didn't bounce back as much as the market did, from that April low. But we're now starting to see some interest in this sector. Maybe telegraphing a little bit of softness, or that's the market kind of thinks. We saw Costco have a good day yesterday. These guys are probably going to be one of the best retailers, one of the retailers that is going to best take advantage of AI, just because of their size,
right?
And just how they procure stuff, how they deal with all their vendors and partners. If we get above this little high, if we can kind of get a little bit of momentum above that, sort of around the $104, I think it's around that range. And that, if it kind of goes back to that sort of high back there that we saw in February, it's pretty positive. This is a kind of stock that, you try to buy at a good spot, but if you don't have to get too cute. I think it's a good business. I'd like that to be, 4 or 5% of my portfolio. Go pick up 2% today. Don't even worry about, just buy it today.
Prices.
Worry about the next allocation that you add to it. You always want to pay more for something. It sounds, okay. Because
it makes absolute sense. It means what you have already.
It confirms your idea. It confirms that, as opposed to, we talked about, averaging down. We never do. That's a lesson. We talked about mistakes. That's a lesson I learned a long time, was never average down. Always pay more for something because it confirms your idea. So Walmart, though, you can go out and buy this today, buy your initial position, whether you broke it in half or a third, or you can go buy it today.
No real concerns anywhere on it.
Yeah, no concerns.
Okay, and let's move on now to Nutrien, which is a crop input and services.
Yeah, now these guys, there's not a lot of people that do what they do around the world. So you're sort of, yes, they're a well-run company. We still own the stock.
Mm-hmm.
We would buy this today, but it's, there's not a lot of players. So you're really taking a look here at the market, at the sector, and saying, do these crop inputs, are they still going to be needed, right? And is there, are the farmers going to keep planting? Are they going to cut back massively? So, yes, there is a bit of execution issue. You do have some of that, disruption, that sort of stuff. But it's really a theme on agriculture. And if you sort of believe in that long term, this is one of the best names out there to buy. And so
we need to eat, right?
We need to eat. And again, this is a kind of the quality name that it's going to be a lot more volatile than Walmart. But again, if you believe in that long term, maybe you want a less position of Walmart. So maybe your initial position, your whole position is going to be sort of 3% or 2.5%. You take a 1% or 1.5% position today, and again, look for a spot to add to it in the future.
Overall, do you like when something dominates an industry like this is doing?
Yeah, I think when you can, Roger, you always go for quality. Now, when you have something that does dominate an industry, you're going to get a bit of that news that drives it. So the whole, so if you have something happening to the whole sector, then you're going to get that, if it's bad, it's going to hit Nutrien, right? Mm-hmm. And they'll sort of take, they'll shoot first and sort of look later and go, oh, wait a minute, it's not that bad. This is not going to impact Nutrien this much. And then you've got sort of the weather issues. And, so there's a lot of inputs that can move this stock around. But the bottom line is that they're one of the best at what they do, and you want the best, in your portfolio at all times.
Okay, and your last pass pick was Constellation Software.
Yeah, now these guys are
TSX, and it's down 10%.
Yeah, now these guys are a fantastic Canadian tech story. They are their news now is most specifically, you can see this little drop off here, was particularly about the news of the CEO stepping aside. I think he's got some health concerns, but it wasn't really telegraphed to the market. What you didn't want to see here is this sort of long-term top kind of broken. That ushers in downside. Some people might, they might take that level of the 52 to 4,400. What's that? 800, and say, okay, we've got to get to 3,600. Well, look at lo and behold, it got there. So in other words, that distance there was going to be the level to which it kind of corrected to, and sort of did that. So, at 3,600, I certainly would have picked this up. These guys are. There's a few companies that have done it well. OpenText is another one where they've just been acquired. They grew through acquisition. And at some point, you sort of have to digest everything. And then with the news of the CEO, I think it just sort of was getting a bit tired here. And as we talked about off the top of the show, it was sort of set up for something. The market couldn't ordain that the CEO was going to step aside, but the setup was there for some news, and then it was going to usher in the pattern we see. Would I own this today long term? Absolutely, definitely. And you can look at that low there to say, am I a bit early, right? And so, and it's not a lot there. We're talking about sort of an 8-9% to be wrong here. So if it dropped below that 3,600, we'd probably see it sort of probe some lower levels. And so this one, I would be a little more cautious on sort of stepping in because of all this move from there down to there. And so, again, if you wanted a long-term position, you could take a little bit today and then sort of be cautious on the rest of it.
Let's see where it goes.
Yeah.
Okay. We'll be back with Hap Sneddon of Castlemoore, taking your questions on technical analysis after the break. Let's get right back to your calls. We're here with Hap Sneddon. Barry from West Point PEI.
Yes, it's Broadcom, AVGO. Where are they going? What do they do?
Okay.
I didn't hear the last bit.
The last what do they do? They design,
chips.
develop, supply semiconductors and infrastructure software solutions.
Well, yeah, Barry, you should make sure you want to know what you own. This has had a fantastic chart. It kind of held right in there. We've seen this one, unlike what we just saw with Canadian.
I forgot who we were just talking about. We've gotten through
CSU,
a lot today.
Constellation, yeah. It actually held there. So that was pretty positive, right? And again, this is what the market kind of looks like. It's sort of holding on there. It's close to that sort of 20-day. It's kind of bouncing around that. The 20-day moving average is sort of a shorter-term look at sort of support. So it sort of holds along that. And if it sort of breaks that, it sort of helps you to say, okay, what's the next spot it's going to hold into? I wouldn't really worry about the stock until it sort of breaks 326. If it breaks 326, that means that we're probably going to have a bit more weakness, and then we'd sort of see it sort of come into the, sort of just around the $291 level. So break of there means we kind of go there. The whole sector's been pretty good. A lot of the indicators are sort of washed out. We know chips are sort of still topical, but they've also run a lot in the last couple of years. First, they were the first movers of AI, and then we kind of got into the companies that are going to use AI. We reference Walmart. So you have the hardware that creates the technology and then the people that use that technology. So we had that first rush and they all ran up. And then we sort of had a resumption of that hardware move again with things like NVIDIA, AMD the other day, kind of spiking up there with a ownership take being done by, I think, OpenAI, I think it was, taking 10%. So still a good sector to be. You can see today, just what I talked about, it's kind of pretty volatile. So if we had sort of a break there, everyone's going to probably run to those AI trades, Roger, and sort of pull their sails in and do that. So I would expect, we can't tell much, but if it breaks that line, I gave you a couple of levels to look at, 326 and then probably 291. So expect volatility with this one, but it's one of the best quality out there. There's a 3 or 4, and you can say they're fantastic. Taiwan, Broadcom, NVIDIA, Marvel, a few others that, you're going to want to hold these long term, but you're going to have a bit of a bumpy road at times that could see today.
Try not to look too much. Right?
Yeah, not too much, and make sure you've got the right weighting in there. If you're really up on Broadcom and you're looking for a reason besides money management. So again, that doesn't matter about the market. You just look at your portfolio and go, well, I'm up a lot, I'm going to sell some. You don't need to look at the markets. You don't need to do anything else. What we talked about just now is sort of the read of it. And so, clip that if you're got too big of a position, clip that right now and then look to, for those supports to come in there and then ride that next position out.
All right, you want to sell the right things.
Yeah.
Chris from Calgary, what's your question?
Hi, can I get an analysis on ChemTrade Logistics? Thank you.
Yeah, this is a stock that I've held for quite a long time. I like it. Some pretty good news there. Their space it got quite interesting. They're in water treatments. They're one of their big ones, and sulfur and all those sort of stuff. You can see the numbers. Pretty decent for a little Canadian stock that's in that space that's not maybe robust. They've sort of bucked the trend. They're not a big stock, but technically it's quite good. This one we'll have to look at. We saw the lows there around $9 and a nice little run there since those lows. So if we look out longer term, if we can do that, get that 3-year look from the control room, we'll see sort of why we continue to hold it. We haven't had to clip this one yet, But this is one where we're sort of, this action here really made us kind of want to do it. There was no big rush. There we go. So you got a nice little trend up there. Some peaks and valleys at times, but it comes right back to support. And so this is what you want to see there. A little above trend there. So could it come back a little bit? Yes. But you can see there 3 years up 82%. We've bought it, I think, about 3.5 years ago, and we continue to buy it at every chance we get. And just a fantastic little company. It's not the biggest company out there, so you want to make sure it's in the right weighting in your portfolio. But if you don't own this, I would take a little snick of it today, and 1%, 1.5%, and then wait. Just wait and see how you grow into holding this one. It could be a little volatile, but it's a good space to be in right now, and a well-run company.
Okay. Nelson's calling us from Toronto. Nelson, what's your question?
Hi there, Hap. Can I please have your comments on Richelieu Hardware? I'm an old money manager from Montreal. I remember a Dave Sneddon who worked for Pemberton Securities, a wonderful gentleman. Was that your dad?
No, it wasn't, but I've heard of Dave before. We know all the Sneddons in Canada. We're from a small, it's a small group that came from Scotland, but I've been asked that question before, so I love you kind of bringing that back there. And Pemberton, I started out with Rich Green, so those old names, and I'm kind of dating myself a bit, 32 years in the business, but Richelieu, little spike up there, so that's quite interesting. If we've got an old dog in here, he'll know that main number there, like, pretty good. And then that hold there after a little decline there from August, kind of again, what's that do? It lets you hang your hat on a place and say, what if I'm wrong on this? Am I too early on this? You never want to be early where a stock is just, the stock, if we look back here and it's sort of just on the here, you never want to just buy it there. You have no idea where you're at. But now you have an idea. You've got two places, and this most recent low should hold. You can see 1 year against the market, it's down. So, okay, but at a bad tape, what you want to look at on a bad tape. So we got a bad tape today. Mm-hmm. Not terrible. I think it'll be okay eventually, unless something else happens. but we're up on a bad tape. So that should tell you something. Why is this up on a bad tape? Is this just the only place people have to go? Is it people have to trade something, so we're going to go? Or is it meaningful? Is it meaning, will this persist through, whatever chop we have now? And I would say that, without knowing how you process the fundamental news, because something fundamentally happened today that I don't know the story yet. I didn't have a look at the market to see what Richelieu did, but something happened today that suggests that people are very interested, and you've got a great entry point here. You've got this downtrend there. So, this is one that you would want to take a little position on if you've been watching it for a while, and then look for that, confirmation that it's there. And the first confirmation is going to take a little ways to get there, right? And that's going to be sort of probably around $36, $37, not too far away. But once you do that, then you're going to, you're going to come into this underside there of that breakdown back here. So that breakdown made all these people that bought it, all these people here that bought on the breakdown, I want to get out. That's their thinking. They maybe change their mind, but the point is, once you get above that trend line there, then the next target's going to be back up to the, sort of $43 range. So good one to focus on today.
Okay. And we'll be back with Hap Sneddon of Castlemoore, taking more of your questions on technical analysis. All right, Hap Sneddon is here, and caller Don is in Edmonton. Don, what's your question?
Freehold Realty.
Okay, thank you for that. Freehold Realty or royalties? Royalties, Freehold royalties.
Yeah, it sounds like we're free to go anywhere with it. He didn't ask us much. We're just free.
Take it away.
We're free to roam. Well, this is an oil and gas name. The sector's come under a bit of pressure, but this is one area that we've been gradually building. We've got a couple names in those names, and we sort of got a commodity basket ETF that's got a lot of half of it's energy, the other bit it's gold. So the manager of that ETF does what they think, but it's a theme that commodities are quite interesting. We saw it with the job number today, and sure, the EV space has come up, but where are we at with the whole energy? And gas has bucked the trend a bit, but oil's sort of taken it on the chin a little bit. So this little down move here today, it doesn't really worry me too much. The stocks right now are sort of reacting by investors, and I think erroneously, to the price of the commodity moving around. A lot of investors will do that. They'll see the commodity move around, then they go over to the stocks. They should start with the stocks and then go to the commodity to see what's it telling me about that. But, I think, we could have a little bit of correction. We'd probably come into this range there, sort of around $13. But this little trend here is a pretty decent one. And the whole sector, I think we're going to talk about another energy stock later, as not been the best place. It's volatile. It's whipping around, and people, okay, energy is not a good play. OPEC Plus is pumping more. There's all these stories, but the names look interesting, and particularly ones like this that pay a decent little dividend and have some pretty good upside. So a lot of the energy space have places to kind of hang your hats. Like, okay, yeah, it's been beat up, it's whipped around, but these are decent little trades that become good investing stories over time that are worth looking at.
Okay, let's move on. And Chris from Hamilton.
Oh, thank you for taking my call. I'd like Hap's view on Dream Industrial REIT. It seems to be in a bit of a trading range, and what I just wondered what he thought the outlook is for it and whether you should continue to hold it.
Okay, thanks, Chris.
Yeah, sure. This looks a lot like we talked about, and it'll look like one of my top picks later. But the energy. The production names we talked about, like Northland Power, where you've got this downtrend of the moving average. It's sort of kind of just doing that, and so another way to do it is that sort of action there. This is sort of positive. We've come off this low, not as big of an upside as the regular market, down again against everything. The whole real estate market's sort of been bifurcated. It's been choppy. There's some that done quite well. Ones that maybe focus on apartments are a bit better than smart centers, the retail issue. But this one does look interesting. I don't know the composite of it. What kind of industrial does it own today? But this is pretty constructive here. This action right there to me is pretty positive. And all the indicators are they've come off, but they're sort of coming back to an interest level. Meaning once we get through any corrective phase, these guys will probably be well bid. So I would hold this one or buy it now.
Okay, let's get some more callers in before we run out of time. Dabby from Burnaby, BC. Hello.
Hi, good morning. I'm just wondering if I could get his analysis on CNQ. I do own it, and it is going down, but I'd like to see what he says about it. Thank you.
Okay, thank you for that.
Yeah, this April low is a constant theme there. It's sort of coming back into this chop here is pretty positive. This is one of the best, highest quality producers out there. If you don't have enough energy, if you've got a lot of energy, I wouldn't worry about this. But if you don't have it and you want to start in the sector, this is sort of a decent place to start. We like a few other names that are sort of down the tier because we think they'll be picked up versus like a big behemoth like these guys. But certainly one to go and take a position on. And then you could look at this $40 here. We're at $45, but this $40 would be, this might go back and revisit the 35. But if you pick this up today, expect some volatility.
Okay. And let's get in Peter from Ottawa. Speaking of volatility, talking about gold. Peter, I ruined it. I ruined your surprise, Peter. I'm sorry. What's your question about gold? Oh, we've lost it. Well, let's talk a little bit about gold.
Yeah, we can see that if we got shorter term, what we'd see here is what's kind of a reversal. That would be where you have a price bar like that, and then the next day you have a bigger price bar, but it ends down. So this whole action there. Reversal day means all the action the previous day has been encompassed by the next day's action. So it moved higher, but it closed lower. And so that's a reversal because it's all contained within that price action there. We saw that in gold. And if you look at the US dollar, we see we're up a little bit today because of the markets. They tend to rush to it a little bit, but there's no connection between safety and gold. The biggest connection between gold is the US dollar and gold. Okay. Mm-hmm. I'm a little worried about US dollars. I'm going to maybe lighten up, but I'm not going to go to the ruble or I'm not going to go to the Chinese currency.
You're going to go to gold.
You're going to go to gold as a sort of a. So you could. We talked about the Avaya earlier off the top, but this would be one where if you've got a big position there, there's the index kind of there. This is one where now that we got this moving up, it's going to put some pressure on gold. So as the index moves higher, you get some people selling some of their gold and going back to the US dollar. And so I would expect this. And so this is something you clip. You're $4,000, nice round number. Maybe you clip a bit if you've done well. But thematically, it looks good long term. So you have to kind of balance out those short term versus long term.
All right. On that note, that's all the time we have for calls for today. But don't go away. Hap will be sharing his top picks coming up next. Join us Tuesday on Market Call. James Telfser will be on the show. He is partner and portfolio manager at Ewing Morris and Company Investment and Partners, and we'll be taking your questions on North American stocks. And if you missed Market Call, check out our daily podcast. You can find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. All right, time now for Hap's top picks. And the first one up is Amgen. It's a biotechnology company. What do you like about it?
Well, they've been kind of beaten up a bit. The whole space has been beaten up a bit. Trump coming in the U.S. was really going to go after the drug makers for their crazy pricing down there and sort of say, look, because the U.S., they pay the highest prices and the rest of us sort of benefit. We get the knockoff versions eventually. And so he's come at them with that. And so the whole sector was kind of took a hit. And so you could look around. You could look around anywhere. There we go. So the fantastic trend. This was it here that so it came off a fair bit. It's kind of finding its legs here on the lower end of that channel, right? So that's sort of like a good spot there. This is one that you don't have to tippy-toe around. You can kind of go in there, take your initial pick. I'm not, a little less in the market there again. So back to our theme there about what goes down less during corrective phases usually is what might lead you out or where the action's going to kind of come first and what will come out of that. Not always, but that's where investors look at, So this hasn't really participated like the rest of the market there. Up a little bit since since the April low there on tariffs. These guys they look at some of the biggest and hardest diseases they look at, right? So it's always the hard stuff they're looking at, and it's all therapeutics. Yeah, and it's all unmet stuff. So stuff that's really, particularly hard to deal with in oncology, inflammation. I'm just reading from my notes here. This company is a fantastic company. They execute really well. They've got a fantastic pipeline. So they're, drug companies are always about what they've got rolling out and what's working.
And when you're looking at, are you looking shorter term on the graphs? Or you're looking longer term for it?
Well, you look long term to say, okay, what's happened? Then you kind of look shorter term and say, okay, how can I step in? So the shorter term for us, because we are longer term investors, the shorter term we look at to say, how can we enter or how should we exit? How should we clip those positions I talked about? So that's how we look. That's what we do there. So these guys are fantastic. And as Stanley Druckenmiller says, pretty famous investor, the most money in this business is always made, and I know this after 32 years, is by sitting on your hands. And so this is a name that once you take your initial position, sort of sit in your hands. Maybe you don't have to get up to the top position, but start it out with your half position and just leave it alone. You're going to do fine. In 10 years, you're going to be quite happy.
Okay. Let's move on to Algonquin Power. It's a utilities and operates in Canada and the U.S.
Yeah, no, these guys are, this is sort of that action there. We look at longer term, we'll see, but all this action here too, they'll spike up there the last couple of days. But this action here was quite positive because it broke that downtrend. There we go. So this is, we've seen this pattern a few times where it kind of makes this bottom, and there's a low, and there's another low. Pretty good at what they do. They've got two segments. They got their Liberty Power, which is all the renewables. They produce that, wind energy, the thermal stuff. And then they've got their utilities where that's where their big focus is trying to be, coming up the quality stream and becoming a business that can rely on its regulated part of it. So they've got a new officer now, shows you their commitment to Chief Regulatory and External Affairs. So what they have to do is, for all this regulatory business, they have to go ask for these increases. And so this is where they want to drive their business. That part, they've gone from sort of a mom and pop producing, wind and power and solar to, a more robust business, a bigger business. And this is what they felt was necessary, is to getting somebody in this role that will take care of all those regulators they have to deal with because they have to ask for increases. They can't just raise their prices. It's regulated price increases. And so these guys, I think, fantastic name long-term. You can see 5-year number down 60%. You can buy this name now and just sort of grow into it again. Amgen is the same sort of thing. Both those names are sort of, this is a bit bigger as far as the longer-term downtrend, but both are names that you can hold long-term.
What kind of a factor is it for you when they bring in an executive like that, a new executive?
Well, it's quite positive. They're carving out this role that they didn't need before because now this regulated part of their business is growing, and that gives them, that increases their balance sheet, more stability, right? And sort of that will charts the way for them to move up the quality chain from that smaller company they were originally.
Okay, and your last pick is iShares Dow Jones U.S. Insurance Index Fund ETF.
Yeah, that's a mouthful. And this is a way, instead of trying to, pick one sector, one name in a sector, is you go out and there we go. We got the chart of that. You see it's a little choppy. This band there is pretty interesting. We want to see this breakout. The theme today for some of the new names that I showed and that where we see some strength is predictability. Insurance is reasonably predictable, although they do have some issues with shocks from cost rising or natural disasters. But the rest of their business is the whole sector is pretty stable, and they got some really good trends in them adopting AI, affecting their claims and underwriting process, their ecosystem growth. So, all the partners they deal with. So there's lots of things they can do in AI. And, you could go out and look at MetLife. You could go look at, and this holds all the biggest, Chubb, MetLife, Progressive, Allstate down the list, right? But you can go out and look at a couple of those too if you want. And we own MetLife as well as Allstate, I believe. And so this is just a way for investors to go out and capture the whole sector in one. It's a bit safer than trying to pick one. You get the one wrong,
And when you see an ETF, there's quite an up and down. When does that range become a little too big for you, where it makes you a little uncomfortable?
Well, yeah. So when you see something like that, normally you don't want to see that in some of your ETFs, but again, it's sort of held in these lows, right? And so this is a theme where saying, I want to have insurance in my business, in my portfolio, and I'm not going to pick anyone specifically to do that. And you can. This helps you to reduce all of your risk as far as if there's a name. If you like to, you can later on go and.
All right, I got to catch you off there.
Right,
we are out of time. Hap Sneddon, founder, chief portfolio manager of Castlemoore. Thank you for joining us. Have a great Thanksgiving weekend. Thank you for watching Market Call. We'll see you after the long weekend.